the second aspect of this conversation, which is jewelry, which is something a lot of people consider as investment, even if they know that they're never going to go out and sell that jewelry, versus I will also talk about bullion, because people are going out and buying coins, versus gold ETFs and jewelry. Gold ETFs and jewelry companies. So, but interestingly, and I want to put that as a point to discuss as well, gold ETFs saw inflows of over 2,000 crore rupees in the month of June after having a pretty lackluster few months. So that's also an interesting point. But Santosh, how do you look at the pros and cons of each?
Yeah, so let's break this down. Now, normally when we talk about gold to a traditional investor, there's a confusion in their mind about what they think gold is and what we think gold is. Now, for a normal household, gold is the jewelry that they wear. Now, for maybe a slightly more affluent household where they have enough jewelry already taken care of, then they think about holding gold bullion, which is in coins or bars. Now, if you have to compare the three, what most of India or most of the households are aware of is jewelry is equal to gold. They're not aware that gold could be invested in bars or bullion form and maybe maintained at home or in the bank lockers, which usually is. And the third part is that even jewelry could be accessed through buying the jewelry stocks. Now let's come to the pros and the cons. Now, when you buy jewelry, the biggest benefit here is the emotional and psychological benefit of that. I can wear it, I can display it, and there's a lot of comfort that we derive traditionally and culturally by owning jewelry, and that to gold jewelry. Now, the risk there is, how do you store it? The risk there is, how do you value it? The price is going up, but you really can't say, my gold is worth so much because it's just a piece of jewelry that you have at home. Of course, it's worth a lot compared to when you would have bought it. But the question is, you'll not be able to really go out and sell it to get that value. You can, but you're crystallizing the gold. Second part is about buying gold bullions and biscuits and bars. The benefit of this is that you get the upfront value of gold without any making charges, without any losses which you will incur in jewelry, which is your making charge, which is your wastage, and at some level even the charge your design charge. Now, holding gold bars and coins against jewelry is definitely a way better investment in the physical form than just jewelry. But yes, you can't wear it, or you can't have a end use for it. You just have to keep it safely. There again, safety and security, like for jewelry, even gold bars have to be kept safely. Now, sometimes we forget that even keeping them safe and secure also is additional cost on maintaining gold. Now, the third part is owning equities which have underlying gold. Now, there are many gold jewelers who are listed, and there are more coming by. There are gold jewelers, there are gold manufacturers. Now, clearly the data is very simple that buying gold jewelers and buying gold jewelry manufacturers have been far more rewarding than just buying gold jewelry or buying just gold bars. The benefit of them also is about the liquidity profile. The equity and the gold bars are a lot more liquid because you are able to quickly dispose them off without any drop in value. Whereas when you have jewelry, you will have to give in to that melting charge, wastage charge when you actually sell them. But when it comes to equity, there is no worry about storage. There's no worry about contamination of the precious metal. You are able to benefit on a real-time basis about the appreciation and depreciation in the gold equities. So net, there is a very wide variety here that we're talking about, not having gold at all, but having underlying exposure to gold in equities versus physical gold versus jewelry, which is actually a consumption item. The benefits are very, very clear. The only thing that is we're not yet used to treating gold investments by investing in gold stocks.
Absolutely. Vishal, you want to very quickly come in and talk about where you rank things, and gold ETF, a lot of people have a concern. They say, or they think that there is no underlying gold that is providing that value. And I think that that is incorrect. As far as I know, gold ETFs have to have the commodity, and that's the only way that they can issue those units. So how do they rank? How do you rank them?
So very clearly, our sort of belief is that gold ETFs sort of come in first. In fact, there may be variants of gold ETFs like gold mutual funds also, which use gold ETFs at the underlying level, which enable you to buy through in formats like SIPs that investors are very comfortable with, which could come into that framework. But clearly, gold ETFs at number one because of liquidity, because of the fact that it's very simple to have it, no storage issues, no GST when you make the purchase, etc. And of course, there is, at the back end, there is physical gold that actually backs it. So that's number one. Number two is actually um, gold bars and coins. That becomes a very solid backup system in case of a real emergency that you need to get access to these assets. The third is actually gold stocks. And the only thing which works against gold stocks in our mind is that there could be very specific company related items, either linked to the balance sheet or the P&L of that particular company, that could also end up impacting your outcome and not just the underlying gold prices. And lastly, jewelry, simply because it's just not efficient to hold it from an investment perspective.
Yeah, and bear in mind that a lot of jewelry companies are actually changing the mix of products that they sell, and I'm pretty sure that a lot of you have also experienced this. You've seen more gems being sold and more diamonds being sold. It's called studded, of course. So the traditional jewelry is not being sold as much because obviously young people want to look cooler than their parents did and their grandparents did, and they're buying different things than the previous generations did. But both of you, I think we've had a pretty wholesome conversation today. Thank you so much for joining me today, and always a pleasure speaking with you.
Thanks, Alex.
Thank you so much.
All right, that brings us to the end of this edition of Your Money Matters. Let us know what you think and where you rank in the two discussions and debates that we've had today about real estate as well as gold. Do stay tuned, lots more coming up on NDTV Profit.